You are listening to Passport Talks.
And we've been looking into something quite specific, this link between investing internationally in real estate and potentially gaining citizenship in St. Kitts and Nevis.
Right. It's an interesting setup. We've gone through some detailed info on, St. Kitts real estate generally, and also a guide that really focuses on how you get citizenship through that real estate investment, looking ahead to 2025.
And the idea here is to really pull out the essentials, right? Give everyone a shortcut to understanding what this path actually involves.
Precisely. Cut through the noise and get to the core of it, what it means, what the potential upsides are.
Okay, so let's dive in. The foundation here is the St. Kitts and Nevis Citizenship by Investment Program, CBI, you called it.
Correct.
And a key route, the one we're focusing on, is buying property. So what are we talking about in terms of investment amounts and the kind of real estate?
Okay, so under the real estate umbrella, there are really two main levels. First, you've got a minimum investment of $325,000 US dollars.
Okay.
That can be for a share in a government-approved real estate project. Think larger developments the government has vetted.
Right, ones they see as beneficial.
Exactly. Or it could be a specific condominium unit within one of those approved projects. That's the first tier.
$325,000 minimum. And the second?
The second option requires a higher investment, a minimum of $600,000 US dollars. And that's for buying a single-family private dwelling, a standalone home, essentially.
Okay, $325,000 for a share or condo in an approved project, or $600,000 for a private house. Now, if you invest that kind of money, is it just gone, or can you get it back somehow?
That's a really important point. The information suggests these investments aren't necessarily locked away forever. There's a holding period 7 years.
7 years, okay.
After holding the property for those 7 years, you are allowed to sell it. So yes, the investment is potentially refundable through resale down the line.
That 7-year time frame is definitely a key factor to keep in mind. Just for context, though, are there other ways into this CBI program besides property?
Yes, absolutely. There are two other main routes. One is a non-refundable contribution.
Like a donation.
Exactly. It goes to something called the Sustainable Island State contribution. That starts at $250,000.
Non-refundable, though.
Correct. And then there's also what they call a public benefit option. This also starts at $250,000, and the investment goes towards specific pre-approved public projects.
Okay, so good to know those exist, but we're really zeroing in on the property side today. What makes that route attractive? What are the big benefits one might see?
Well, several things stand out. First, convenience. The entire process, applying for citizenship, even buying the property, can apparently be done remotely.
You have to fly there?
No need to visit for the application or the purchase itself. That's a huge plus for many people. Second, there's no residency requirement. You don't have to live there or even visit to get or keep the citizenship. Your life can continue wherever it is now.
Wow. Okay. That's significant. Any financial perks tied specifically to the property purchase itself?
Yes, there's a notable one. Foreigners buying property usually pay something called an alien landholder license fee. It's typically about 10% of the property value.
Right.
But if you're buying through the CBI program for citizenship, you're exempt from that fee. That's a direct saving up front.
10% is not insignificant.
Yeah.
So remote process, no need to live there, and avoiding that license fee. What about the property as an asset? Can it make money?
It certainly seems possible. The information points towards rental income potential. Owners can lease out their properties.
And what kind of return are we talking?
The potential annual yield mentioned is in the range of 2 to 5%, but here's a key detail. That rental income is tax-free in St. Kitts and Nevis.
Tax-free. Okay, that definitely sweetens the deal compared to earning rental income elsewhere.
It can be quite an advantage.
And is there demand? You mentioned renting it out relies on tourism, I imagine.
Very much so. Tourism is a big driver for their economy. The figures for 2023 showed nearly 900,000 tourist arrivals.
Nearly 1 million. That's substantial for islands of that size.
It is. And that strong tourism market suggests that, yes, there should be pretty reliable demand for rental properties, which supports that income potential.
Okay, so potential income, tax benefits, flexibility on residency. What about the value of the property itself? Long term?
The trends look positive based on the info we saw. The average property value has apparently been increasing by about 4% per year.
Okay, steady growth.
And remember, you can sell after 7 years. Given that average growth, the potential resale value could be, say, 20 to 30% higher than what you initially paid.
So potential capital appreciation on top of everything else.
Exactly. Now, there's no capital gains tax when you sell, which is good.
Ah, another tax advantage.
But you do need to be aware of stamp duty on the sale. That ranges from 6 to 10%. So there's a cost associated with selling, but not on the profit itself.
Right. So potential to get your initial investment back, maybe even with some profit after 7 years. It's a citizenship pathway, but with a definite financial angle, too. What about family? Can you bring them along?
Yes, that's a major feature. You can include close family members in the application.
Who qualifies as close family?
Typically, it's your spouse, children under 18, and also children aged 18 to 25 if they are full-time students and financially dependent.
Okay.
And you can often include dependent parents over the age of 55 as well.
Parents, too. That's quite inclusive.
It is. And another point, any children born after you become a citizen are automatically eligible for citizenship too.
That covers future generations. It seems comprehensive. Okay, now about the property itself under this program, are there specific rules about owning it?
Yes, a few key conditions. The program allows for both joint ownership, maybe with another investor, or full ownership.
Flexible there.
Yes. But whichever way you own it, that minimum 7-year holding period is mandatory. You must keep it for at least 7 years from purchase.
Right, we cover that. And no obligation to actually live in it.
Correct. No requirement to reside there at all.
So if you're not living there, how do you manage it? Especially if you're renting it out.
Good question. The general recommendation for non-residents is to hire a local property management company.
Makes sense. They handle the day-to-day.
Exactly. Finding tenants, collecting rent, maintenance, all that. Although an interesting point in the material was about properties in those government-approved projects. Maintenance is often included as part of the deal when you buy into one of those. So that could simplify things quite a bit.
Ah, potentially hassle-free maintenance. That's appealing. What about ongoing running costs, like property taxes?
Yes, there are property taxes. It covers both land and the building itself. The rates are fairly low, generally between 0.2% and 0.3% annually.
And does it vary?
It does, depending on the property type, commercial, hotel, residential, agricultural, and whether it's on St Kitts or on Nevis. The rates are slightly different between the two islands for some categories.
Let me give an example.
Sure. For, say, a residential property on St Kitts, the tax is 0.2% on both land and building value. On Nevis, it's a bit lower for land, 0.075%, and 0.156% for the building. Hotels on St Kitts are 0.2% for both, while on Nevis, it's 0.2% land, 0.3% building. So there are nuances.
Okay, different rates, but generally low percentages. And you mentioned exemption from purchase tax for CBI applicants.
Correct. You're exempt from the usual taxes when buying the property if you're doing it for citizenship. But remember that 6-10% stamp duty applies when you sell it later on.
Got it. Initial purchase is tax advantaged, but there are ongoing taxes and a selling cost. Now, what kind of places can people actually buy? What's available?
It's quite varied. You've got villas and apartment complexes, obviously residential. These have good rental potential. Some high-end places could potentially fetch like $30,000 to $40,000 a month in rent.
Wow, okay. That's high-end. What are starting prices like?
On St. Kitts, you might find villas starting around $475,000. A share in an apartment building could start lower, maybe around $200,000. But remember, the CBI minimum is $325,000 for that category.
Right. What else?
Townhouses are another option, often offering better views with terraces. Prices for full ownership there tend to start higher, like $1,750,000.
Okay.
And then there are hotels and condominium hotels. Investing in these taps directly into that strong tourism market we talked about.
Like buying a share in a hotel.
Exactly. You could get a share in, say, a 5-star hotel. The potential rental yield mentioned per room in high season was between $550 and $1,200. The minimum investment for a share like that aligns with the CBI threshold, $325,000.
So from private homes to shares in big resorts. Seems like a good range. The information also seemed to group these slightly differently within the CBI rules.
Yes, it breaks them down into 3 main categories based on the investment level and structure.
So what are they?
First, the private home category. That's the $600,000 minimum investment we mentioned. It's full ownership of a house, villa, maybe even an apartment complex, subject to that 7-year hold, potentially refundable via resale.
Right, the higher tier.
Second, the condominium unit category, minimum $325,000. This covers owning a specific condo unit, jointly or fully, within an approved development. Same 7-year hold, same resale potential.
Okay.
And third, Share in a government-approved project, also $325,000 minimum. This is typically for buying a share, jointly or fully, in those larger, often high-end, government-backed hotels or resorts. Again, 7-year hold, refundable aspect.
Clear breakdown. So private home, $600,000, condo unit, $325,000, or share an approved project, $325,000. If someone's considering this, where should they look? Which areas are best?
There are a few key spots. Basseterre, the capital on St Kitts, is the main economic hub. It's seen growth, especially in luxury hotels and resorts.
The main city. Makes sense.
Then there's Frigate Bay, also on St Kitts, very popular with expats and tourists. Lots of high-end residential properties, vacation spots, close to beaches and amenities.
So like a prime tourist expat zone.
It is. The Southeast Peninsula is positioned as even more exclusive. Pristine beaches, luxury developments like Christoph Harbor attracts a very high net worth crowd.
Okay, super high end. What about Nevis?
On Nevis, Charlestown is the capital. It has more of a small town feel, but tourism and real estate are growing there too.
Quieter, perhaps.
Potentially. And then there's Newcastle on Nevis, known for its scenery. Plus, it's near the airport and some resorts, making it attractive for luxury investment as well. The best spot really depends on what the investor is looking for, lifestyle investment focus.
Right, different vibes. Basseterre for urban, Frigate Bay for popular coast, Southeast Peninsula for exclusive luxury, Charlestown for charm, Newcastle for scenery. Okay, let's get practical. Who can apply, and what are the costs besides the property itself?
Eligibility is pretty standard. You want to be over 18, have a clean criminal record, no serious health issues, and crucially, you have to prove your income source is stable and legal.
Due diligence, essentially.
Very much so. And as we said, you can include family. But beyond the property price, yes, there are significant mandatory fees. There's a state fee.
How much is that?
It's $25,000 for a single applicant, $40,000 for a couple. For a family, it's tiered $25,000 for the main applicant, $15,000 for the spouse, $10,000 per child under 18, and $15,000 for other dependent adults like parents.
Okay, state fees. What else?
Due diligence fees. This covers the background checks. For a single applicant, it's $10,000. For a couple, $17,500. For a family, it's $10,000 for the investor, plus $7,500 for every dependent relative who is 16 or older.
Right, checking everyone over 16.
Yes. And then there are smaller processing fees, around $661 for one person, $1,322 for a couple, $1,982 or more for a family.
So these fees add up quickly on top of the property cost. Can we estimate a total?
Let's try. Say someone buys a property at the minimum $325,000 level. A single applicant might be looking at a total around $360,661, including those fees.
Okay, about $35,000 in fees on top.
Roughly, yes. For a couple buying that same $325,000 property, the total might be closer to $383,822.
Right.
And for a family of 3, say a couple with one young child, it could be around $394,482, maybe a bit more, depending on exact ages.
So nearly $400,000 for a family of 3 at the minimum property investment.
That's the ballpark. And don't forget other costs like potential insurance fund contributions and the standard conveyance fees for the property transaction itself.
Right, standard property buying costs too. There was also a point about reselling private homes.
Yes, that's important. If you buy a private home, the $600,000 option, and later want to sell it to another CBI applicant after your 7 years, you need to demonstrate you've made substantial further investment in it, like significant renovations or rebuilding. You can't just flip it as is the next CBI buyer.
Okay, that adds another layer if you're considering the private home route and resale within the program. What about paperwork? What documents do people need?
It's a thorough list. Everyone needs certified copies of birth certificates, passports, national IDs, proof of name change if that applies, police certificates from your home country and anywhere else you've lived significantly.
Standard background stuff.
Yes. HIV test results are required and 6 passport photos. Then the main applicant needs more. Proof of funds going back 12 months, professional and bank reference letters, both recent, under 6 months old, proof of address, marriage or divorce certificates if applicable, and a detailed statement with evidence explaining where the investment funds legally came from.
Seems comprehensive, but probably expected for this kind of thing. Okay, someone has the funds, the documents, they've picked a property.
Yeah.
What's the actual step-by-step process and timeline?
Crucially, you must go through a licensed authorized agent. You can't apply directly.
Okay, need an official intermediary.
Yes. They typically guide you through about 6 steps. Step 1, preliminary due diligence by the agent. Maybe just a day. They do a quick check.
Okay.
Step 2, choose the property. Takes maybe 5 days. You usually pay a 10% deposit then.
Secure the property.
Step 3, prepare all the documents. Application forms, supporting evidence, translations if needed. This can take 2 to 4 weeks, depending on complexity.
Getting everything together.
Step 4, the official due diligence by the St Kitts and Nevis CBI unit itself. This is the longest part, usually around 4 months. It now includes a mandatory online interview for applicants 16 and over.
4 months for the government checks and interview.
Roughly. Step 5. Once you get approval from the unit, you finalize the real estate purchase. This can take up to 3 months after approval.
Closing the deal.
And finally, Step 6, collecting your citizenship documents. After the property deal is done, they issue certificates of naturalization. You use those to get passports. Collecting these might take another 4 weeks or so.
And how do you collect them?
Usually requires an in-person appearance. Either you travel to St. Kitts and Nevis, or you might be able to do it at a designated embassy or consulate.
So all in, from starting with an agent to having documents in hand, could be 6, 7, maybe 8 months or more?
That seems like a reasonable estimate, yes. It's not instant, it's a defined process.
Definitely requires patience. Now, we focus on the property side, but what are the other big benefits that come with actually getting St. Kitts and Nevis citizenship?
Several key advantages. First, they allow dual citizenship, so you likely don't have to give up your original nationality, assuming your home country also allows it.
That's important for many people.
Absolutely. Second, enhanced travel freedom. The passport gives visa-free or visa-on-arrival access to over 150 countries.
That's a lot. Including where?
Includes the UK, the Schengen area, Hong Kong, Singapore, many major destinations. Plus, citizens can usually get long-term 10-year B1, B2 visitor visas for the U.S. fairly easily.
Significant travel benefits. Anything else?
Tax optimization is a big one if you become a tax resident there. St. Kitts and Nevis has no personal income tax, no tax on dividends, interest, royalties, capital gains, or inheritance.
Well, very favorable tax environment for residents.
It can be. And finally, business opportunities. You can register companies there, trade within the Caribbean community, CARICOM. It opens up regional business possibilities.
Dual citizenship, travel freedom, potential tax benefits, business angles. Quite a package. So just to recap the absolute essentials on the real estate route.
Okay, key takeaways. St. Kitts and Nevis citizenship can be obtained via real estate investment. Minimum $325,000 for a share condo in an approved project, or $600,000 for a private home. You can include family, no need to live there. Potential for rental income boosted by strong tourism. Property can be sold after 7 years. And remember, there are those other non-real estate options starting at $250,000 if property isn't the preferred route.
Great summary. Now let's tackle some quick-fire common questions someone might still have. Can any foreigner just buy property there?
Yes, foreigners can definitely buy property, and if the purchase meets those CBI investment thresholds, $325,000, $600,000 in the right categories, it can lead to citizenship, and you skip that alien landholder license fee.
Why would someone buy property there aside from the citizenship angle?
Well, the citizenship is a huge driver for many using the program. But beyond that, as we discussed, potential rental income, 2 to 5% yield mentioned, potential property value growth, around 4% annually reported, plus the lifestyle factors depending on the location. And for CBI applicants, including family and saving that license fee, are big pluses.
What if someone just wants to live there, not necessarily get citizenship right away? Is residency easy?
Temporary residency options exist, yes. It usually involves an application process, showing you can support yourself. But the information suggests that for long-term security and full rights, the CBI program is often seen as a more streamlined, albeit investment-heavy path.
So to be crystal clear, buying property at those specific investment levels does get you citizenship.
It makes you eligible to apply for citizenship, yes, provided you meet all the other requirements, background checks, legal source of funds, etc. Purchasing qualifying real estate is a recognized pathway.
Right. But you're not just buying a passport off the shelf.
No, that's not how the government frames it or how the process works. Citizenship is granted based on a significant economic contribution. The investment, whether in real estate, the fund, or a public project, is that qualifying contribution. It's investment leading to citizenship, not a direct purchase.
Okay. And that passport, how many visa-free countries again?
Over 150 countries and territories worldwide, it offers substantial global mobility.
What's the absolute lowest dollar amount needed to qualify for citizenship across all the options?
The minimum entry point is $250,000. That applies to both the non-refundable contribution to the Sustainable Island State contribution and the public benefit option investment. The real estate route starts higher at $325,000.
Got it. $250K is the floor. And finally, can Americans do this? Can a U.S. citizen buy property and apply for citizenship?
Yes, absolutely. U.S. citizens can purchase property under the same rules as anyone else. And if they make a qualifying investment through the CBI real estate option, $325,000 or $600,000, and meet all the other criteria, they are indeed eligible to apply for St. Kitts and Nevis citizenship.
So there you have it. St. Kitts and Nevis presents this really structured pathway. Citizenship through strategic real estate investment. Comes with potential perks like travel freedom, maybe tax benefits, rental income, even potential resale value down the road.
You are listening to Passport Talks, a podcast on how to become a true cosmopolitan, how to travel the world without visas, create a safe haven for your family, and access top-notch education and healthcare with a second passport or residency.